And lots of you looking for savings, especially when you check out where the economy stands right now, especially as we head into the final stretch of the year, what it means for both Maine and Wall Street. There's new data out that was released today that paints a mixed picture. Rising producing prices, weakening consumer confidence, and fresh signs of strains in the housing market. Scripps News business and tech correspondent Mara Barrett is live in Denver tracking all of it. And Mara, some of the data released today was actually delayed because of the government shutdown. How did the results stack up against how we know Americans are feeling about their prices, which they say are going up?
There's a wide divide, Del, and a lot of that might be because of that delay with the government shutdown. This isn't exactly a current match with the current consumer sentiment, right? Because the data was gathered in September. It's just being released now. Some people might be feeling very differently right now than they were in September. We do know from new polling that the top affordability concerns lie in the price of groceries, housing, healthcare, and utility bills for people across the country. Groceries leading at about 45% of Americans' main stressor. And another poll just out this week indicates that people are seeing a rise in prices for I think it was about 60% of people feel like the rise in prices has happened in the last couple of weeks. And so that's why we might see a bit of the mismatch here. But if you dig into the numbers, that rising producer price index that you mentioned, it was a 0.3% uptick, which is slightly higher than the month prior. And basically what this means is it's the cost rising for companies, what it costs for them to produce their products and what they sell. If the prices of what they produce goes up, they typically have to pass that on to the consumer, which is why we're seeing the skepticism and the anxiety about rising prices, which then directly devolves into the weakening consumer sentiment that we saw. It's actually the biggest decline, the sharpest decline we've seen since April. So in the last 6 months, people very pessimistic about job opportunities, salary increases in the next 6 months, as well as the overall cost of living. We are seeing a bit of an uptick, I will say, in housing, a 2% increase in housing sales and closing, which is great news, especially after there's been that frustration with the mortgage rates. Those slightly went down. However, if you're a seller and you're looking to cash in on that, Zillow actually just found this week, unfortunately, that half of the homes in the U.S. Over the last year dropped in value. And so that then combined with retail sales actually being up, a steady increase over the last 4 months, you see why we have this mixed bag here, and there's a lot of confusion and concern when we see what's been going on with the stock market, as well as how this could inform the Federal Reserve next month. All in all, ultimately, people, when they're thinking about the economy, they're thinking about their wallet, and that's been a resounding sentiment we've seen in the sense of the stress and anxiety despite all of these larger economic indicators, Del.
So, Mara, you're not the only one watching the market. So is the Fed. They're meeting in a couple weeks. Where do we stand right now with regards to another rate cut? And also, how does that fit in with all of this talk we're hearing about a possible recession?
Well, and that's exactly what the Fed is trying to avoid, right? Like, that is what we've heard time and time again from Fed Chair Powell at these meetings. This will be the last meeting of the year. It's also the last opportunity for the Fed to issue another rate cut. At first, when they went into the end of the year, they thought, the governors thought it was all but certain that this would be another meeting that would offer a rate cut, an opportunity to bring down those mortgage rates, interest rates, to help people pay off debt, right? Since then, as we get this economic data, there has been a lot of public tension between the federal governors, the Federal Reserve governors, about whether they should cut rates or not. There's been a lot of conversation and public speeches they've given, and that's just driving further anxiety to see if this is something that will again caught the attention of Treasury Secretary Scott Bessent, who obviously doesn't have any say in the Federal Reserve's decision, but he expressed them, right? And so I wanted to hear from him in an interview this morning where he said that there should be a rate cut and that the Fed should stop talking about all of this so publicly.
I think that the mistake that we're seeing a lot of times is either looking in the rearview mirror. We're flying a little blind with the numbers here, but we've had 2 cuts thus far, And what do we know? That this Schumer shutdown, the longest in history, has shaved 1.5% off GDP, at least an $11 billion permanent hit. So we know the economy hasn't gotten better. So I'm not even sure what the discussion is here.
Now, it's important to note that Secretary Bessent earlier this month had issued some warnings about recession, about rate-sensitive areas, he said, could face pockets of recession. Housing was one that he specifically noted. Economists are now saying that we might be still in the steady territory of a rolling slowdown, but not a full recession yet. But ultimately, again, that's what the Federal Reserve is looking to tackle, and they really need to consider these conflicting signals that we're seeing, this inflation progress, but also real-world strain on households and the housing market, all the things you and I just discussed, Del.
And you know the old saying, it is a recession if it is someone else's money. It is a depression if it is your money. Scripps News Business and Tech correspondent Mara Barrett live for us. Mara, as always, thank you very much.